Hey guys, it is Julie here with JT.Wealth, and today we have our midweek stock market news update. So let's get into it. All right, welcome back guys, and thank you so much for being here. Like I said, it is our midweek stock market news update where we are covering some highlights of what has happened so far this week and what we're looking at moving ahead. And today we have a lot to talk about, specifically regarding earnings reports, as it is a busy week for them. We're going to quickly give you an update on the status of the stimulus package and then cover what happened with Netflix and Snapchat's earnings, and then look ahead at upcoming earnings for companies like Tesla, AT&T, CocaCola, Chipotle, and Southwest Airlines. And just before we jump into all of that info, this is just your friendly reminder to please make sure you're subscribed to the channel. Really helps us grow and helps you stay up to date with all of our latest videos. And if you enjoy this video, make sure to give it a big thumbs up. Webull also just announced that they have increased their sign-up bonus. So if you are looking to open up a new investment account, check out our link down below in the description. Right now, you're getting 1 free stock just for opening the account, and then another 2 free stocks once you fund that account with $100. So who doesn't love 3 free stocks? All right, now starting out with just a really quick update on the status of the stimulus package, as this continues to have markets kind of going back and forth and feeling a little shaky lately, and continues to not really be settled. Now, House Speaker Nancy Pelosi expressed some optimism Tuesday that a stimulus agreement could be reached this week. That's the plan. That's what I would hope for, Pelosi said, following a call with Treasury Secretary Steven Mnuchin. Now, the two will be speaking again Wednesday, a day after Pelosi's self-imposed 48-hour deadline to agree on the terms of a relief package. However, many Senate Republicans remain opposed to a relief package the size of what the administration has offered, $1.88 trillion, and Pelosi's proposal of $2.2 trillion. Senate Majority Leader Mitch McConnell has warned the White House not to rush into an agreement before the election, citing a person familiar with the matter. So it is still up in the air whether we're going to see a package agreed upon anytime soon, or if this is not going to get done till after the election. We will just have to continue waiting and seeing what happens. So let's jump right into earnings reports, as the calendar is very full this week with anticipated earnings. And you can see here on this very full calendar from Earning Whispers, the most anticipated earning releases this week. So we started out the week with some big companies like Halliburton, Logitech, IBM. Tuesday we had Procter & Gamble, Netflix, and Snapchat. And this morning we had Verizon. Now, after close today, we are looking at Tesla, Chipotle. Tomorrow we have Coca-Cola, AT&T, a couple different airlines. After close, we have Intel, Limelight, Samuel Adams, and on Friday we have Cliffs, American Express. The list goes on. So a lot to watch for this week. Now, earnings reports can be a really funny thing when it comes to stocks. In the most simple terms of logic, you would think that if they met those expectations and had a good report, then their stock price should go up. However, there can be a lot more to it than that. First of all, a company might meet their earnings, but maybe that was already priced in, so you don't see the stock move much at all. Or they did make all of their earnings estimates, but their future outlook wasn't really inspiring or exciting, so you actually see the stock price drop. Other times, expectations are just too high and companies have misses. So there's a lot that can go on, and the stock does not always move as you think it should. So as I said, I'm going to quickly cover 2 companies that already had their earnings release and just what the aftermath of that was. And then we're going to look ahead at some of the expectations for a few of the big names on that list. And we're going to start off with Netflix, who reported their earnings on Tuesday and had a bit of a miss on the earnings per share, which we're now seeing them down about 6% on their stock price. Now, the consensus estimate for the earnings per share was $2.13, with the whisper being a little bit higher at $2.19, but Netflix came in at $1.74, so that was a negative 20.5% earnings per share surprise. Now, they did beat the revenue reported at $6.44 billion over the $6.38 billion expected. Along with this earnings report also came reported fewer subscribers for the third quarter than analysts were anticipating. And this came after Q2 had record numbers. Obviously, a lot of us staying at home and watching a lot of shows. But their CFO said that they expected and knew there would be some level of slowdown. So this decrease was largely expected, and Spencer Wang from Netflix said that they don't really just focus on any 90-day period. And just to give you an example, if the quarter was 48 hours longer, they would have come in above their guidance forecast. There was also a lot of positive commentary around their free cash flow, so I don't think this 6% dip is going to worsen much or last very long, but we will see what the market decides. Now, in very positive earnings news, we have Snap Inc., who is the parent company of Snapchat, and these guys really surprised Wall Street with their earnings report. Their earnings report came out Tuesday after hours, and they had a lovely 125% earnings per share surprise. The consensus estimate was at a -5 cents and the whisper at -4 cents, and they came in with positive 1 cent. Their revenue was also a 24% surprise at $678.7 million. So all of this good news caused almost a 32% jump in Snap's stock price. Snap's daily active users during the third quarter jumped up 18% compared to a year ago, up to 249 million. And their chief business officer attributed some of these third quarter gains to the signs of recovery for some of their brand advertisers. But let's switch to upcoming earnings reports and some expectations around those, starting off with Tesla. Tesla is reporting on Wednesday, the 21st, and it is expected to come out around 4:25 p.m. Eastern Time. Now, the earnings per share is expected at 58 cents and a revenue of $8.2 billion. And that is a 30.1 expected revenue growth. Now, leading up to their earnings report, we've actually seen a bit of a decrease in their stock price over this last week. Now, expectations are high for Tesla's earnings report here, and we know that their vehicle deliveries drive a lot of their results. And we also know that they have had record deliveries for Q3 at nearly 140,000 vehicles. So the market is definitely anticipating a considerable increase in their revenue to go along with this, and hopefully Tesla is able to deliver. Next on our list is Chipotle Mexican Grill, CMG. Now, despite some falling revenue in Q2, these guys' digital sales has been exploding lately, along with delivery and their new rollout drive-thrus, the Chipotle lanes. They are reporting on Wednesday the 21st and is expected to come out around 4:10 p.m. Eastern Standard Time, with earnings per share at $3.44 and revenue at $1.59 billion, representing a 13.3 expected revenue growth. Now, it always kind of surprises me the price point of Chipotle being over that $1,300 mark, but in the last week, there has actually been 3 analysts who have boosted their price targets ahead of this upcoming earnings report. So the market is definitely expecting some greatness out of Chipotle this week and has a pretty positive long-term outlook for them as well. Next up is Coca-Cola, and from this earnings report, investors are really hoping to get some more insight as to the rebound and recovery from their last Q2. Looking to moderate their declining sales to about a 12% drop compared to the 28% slump that they reported in their fiscal second quarter. Now, these guys are reporting Thursday the 22nd at 6:55 a.m. Eastern Time, and we're looking for 45 cents earnings per share and $8.35 billion in revenue. Now, executives from Coke back in July said that Q2 represented what should be the worst financial strain on the business. So shareholders are hoping to see improved earnings and cash flow trends this week. Next on the list is AT&T under their ticker T. Now, these guys have been in a downward price trend lately, so we are really hoping for some positive news on Thursday that can kind of help change the narrative and instill some confidence. They are reporting on Thursday the 22nd about 7:05 a.m. Eastern Standard Time, with expected earnings per share at 77 cents and revenue at $41.63 billion. Now, that is a negative 6.6 expected revenue growth. Now, we know that its core business is in the midst of a transition to a next generation 5G network, and they also just recently launched their expanded streaming service HBO Max. So hopefully we see some positive outlooks in those areas. Next on the list is Southwest Airlines stock LOVE. Now, steep losses are obviously expected given this last year, but Wall Street is also looking for some outlook and guidance as we move into 2021. They are reporting Thursday the 22nd before market at 6:30 a.m. Eastern Standard Time. Now, earnings per share are expected to be a negative $2.44 and revenue at $1.69 billion. Now, that is a negative 70% expected revenue growth. But we do know that Southwest has some formidable strengths, such as their industry-leading balance sheet, and they are well positioned with their domestic flight schedule, as they're going to capture a lot more of recovery, as those are the most common flights being taken right now amidst this recovery. Another big catalyst, though, for any of the airline stocks right now is going to be whether there is another stimulus package approved and what it includes for these airlines. If there is another airline relief bill that is passed, I'm sure we'll see a much healthier outlook for these airlines moving into 2021. But of course, any of that stimulus package stuff is still very much up in the air. No pun intended. So those are some of the highly anticipated earnings reports this week. Of course, you saw the calendar. There are a lot more going on, but this video would take forever if I covered them all. Really quickly, I just want to do a couple shout outs looking forward to next week as well. And that is on Tuesday, the 27th, we have both Pfizer and 3M with their earnings reports, both pre-market at 6:45 and 6:30 a.m. Eastern Time. So let me know your thoughts on all of these. Are there any earnings that you're watching? Were there some on the list that we didn't chat about? And what ones are you really excited to see? I always love hearing from you guys, so make sure to leave it down below in the comments. Of course, just a friendly reminder, I am not a financial advisor. This video is in no way a recommendation to buy or sell any stocks, and any trades should always be made on your own due diligence. If you made it all the way to the end of the video here, you better give us a big thumbs up and make sure that you're subscribed to the channel too. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.